Hello and welcome to Dialogue. I'm Zoe in Beijing. After falling to the lowest level since November 2014, the nation's benchmark stock index, the Shanghai Composite, has been slowly recovering. Though any number of factors could be cited to explain the recent improvement, there's little doubt that ongoing support from government-backed entities known as China's national team continues to support the market. So why did China's stock market plunge last year? And why did the drop trigger exceptional national level rescue? Who's to blame? How should the market be operated? Today, I'm joined in the studio by Professor Hu Deming from Peking University and Mr. Charles Liu, founder of How Capital. But before we get started, let's take a look at this.
China's stock market is relatively young. Founded in 1990, it's still mainly dominated by retail investors, both because the country's culture of institutional investment is just beginning and the pool of asset management talents is still small. And China's stock market is maturing and institutionalizing. Though the market has been slowly recovering, the Chinese stock market of late has seen a real roller coaster ride. People were so excited when the market started rising in late 2014, and more investors were jumping on the ride every day. By May 2015, the Shanghai market had surged 40% over the year, and then things took a turn for the worse. In mid-June, the A-shares started plunging. By June the 19th, the Shanghai index had fallen 13% on the week. And in late June, the central government decided to intervene. The central bank cut rates, and the CSRC halted initial public offerings. It wasn't until late August that the market started to gain back some confidence and things started to pick up. But despite the stock market fluctuations, China's economic fundamentals are still sound.
Okay, the Chinese stocks have been enjoying 3 months rally. This is quite a different story than last year. Do you think this kind of a momentum will stay, or probably another eventful year?
I think it'll be an eventful year because this year I would consider a year of black swan. There are just so many imponderables, including the U.S. election, the possible blow-up in the Middle East. The geopolitical factors have become much more significant than any in any previous years, going back to the last decade. And these things will have impact on the global market and, of course, on the Chinese market. It will have an impact on the RMB, which will also impact on the capital market.
So you're talking about the outside factors will have a weight on this.
Yes, I think the global pool of capital is now truly that. It's global. When RMB was appreciating, when the markets look good, a lot of money come in chase of yield, especially with quantitative easing in the West. I know of a number of financial institutions in the West which use all kinds of methods to bring money in, not only for the RMB appreciation, but also for the Chinese market, capital market. But if that goes away, appreciation is no longer a one-way street, things will happen. And it's one big pool of capital that flows in search of yield.
What is your projection, Mr. Hall?
Well, the financial side is indeed what Charles has just mentioned. It's full of uncertainties. But I think the real side, I'm a macroeconomist, I see to this year as well as next year, the world, especially on the real side, is on a steadily recovery mode. But it's not that fast, but I think it's steadily recover. But on the financial side, witnessed the QEs from either US, UK, European Unions, as well as Japan. So a flood of money, the funds that's going nowhere.
That's right. Looking for a place to go.
Yes, you're absolutely correct.
Recently, some rating agencies have downgraded China's outlook. Do you think that is something that we should worry about? The Chinese regulators say we shouldn't worry about.
In the long term, I think we're in a much better position than, say, in '97. Well, I would never compare with Greece, but we're relatively better than, say, '98, '99, where the SOEs restructuring and all the hopelessness back then. But this year, the debt is mounting, but I have all confidence.
Let's talk about last year, because last year is something we should study carefully. First of all, what is behind the rally of last year's stock market? It jumped to 5,000 in a matter of a month. Do you think it is reasonable?
the micro-analysis, of course, the leverage, the so-called leverage ratio. And of course, I think that's a micro-analysis. I need to some extent explain the facts. But what's intrinsic behind the micro-evidence is the mental psychology as well as the macro fact that's supporting the mental psychology. And I would say last year was a quite black swan years. And I don't think, not with all due respect, I don't think this year we're going to witness that many black swan.
If we looked at last year, I think it's a combination of forces which have brought this about. Number one, the Chinese market is mostly retail investors, 80%, and they're not very experienced and not very sophisticated. Number two, there was an attempt by many in the financial circles to play leverage and providing leverage to very unsophisticated investors.
Why did the regulator allow such high leverage?
That's exactly the main issue. The regulators were simply not sophisticated enough neither. And I think it was very clear from the beginning of the year that in Shenzhen and elsewhere, you can get 3-to-1, 4-to-1. And then, in addition to that, you go to your securities firm with your 3-to-1, 4-to-1 becomes 8-to-1. Regulators were well aware of it, but did not take action. I think it's really clumsiness in the handling of the whole process by regulators that contributed seriously to this.
So how much do you think mismanagement of the regulators have to be blamed for this?
Well, mismanagement is always a high side. I wouldn't call it, but thinking about last year, in the beginning of last year, well, we don't really expect last year is to be a good year. So in a sense, if I'm a regulator for the stock market, then I would certainly have some positive hope on the rallies of the stock market. So boost the confidence and consumers. And this kind of leverage, I think it's a micro evidence, micro in a sense that technology-wise or human psychology-wise or even things we never seen before. So once you face with this kind of things you never seen before, if capable regulators, I would say, has to be very, very capable.
You mentioned psychology a lot, Mr. Hall. It seems that in the Chinese market, as Charles mentioned, there are a lot of unsophisticated investors. They are mom and pop investors.
More than 80%,
they are not so financially literate. So they jump in when the market has already run high, and they are the worst hit.
Who can resist the temptation of having a 200%, 300%, even 400% return in, say, a couple of a month?
That's right.
And I don't think
you don't blame the investors.
I'm sophisticated. I'm sophisticated enough, but with this kind of the temptations, it's hard.
That's one part. Absolutely, that's the human psychology, and the temptation is overwhelming. But at the same time, there were a lot of speculative activities also by hedge funds, by foreign hedge funds, either through QFI or through other channels. There are many ways that you can move money in.
But they were the smart players.
And they started to short the market in a big way, including using derivatives. So this is what I was referring to in terms of...
But they were one step before the average investors.
Right. And then the average investor gets caught with the losses.
The primary market and the secondary market.
Yeah. I think it's an educational process for many. It's a process that people have to go through and the markets have to go through. No one would have thought, for example, how much impact the Chinese market would have on the global market. In fact, the Chinese regulators were shocked at the impact that the Chinese RMB depreciation or the market collapse had on the rest of the world. They were not used to it. You're no longer a sideshow. You're now part of the main stage.
And did you think those regulators and decision makers made the right call after market crash?
I don't think so, because what happened at the beginning of the year?
What are the things they think they did wrong?
I think it's number one, communication is an issue. To communicate to the market on what the intentions are. China is too used to having those with the relationships knowing what's going on. Those without the relationships will just have to guess and follow those with relationships. But I think increasingly regulators have to be more transparent and really show the market what their intentions are over the long haul.
But it seems it is what the Securities Regulation Commission is planning to do, to have more transparency, to have a better equipped
in the long term,
team.
it has always been the claim.
Why isn't happening? Why isn't happening yet?
Transparency is something that my wife's always speak to me. I need to be transparent. I mean, she's been telling me for her whole life, and I believe it's a whole long forever process, especially in a country like China, where the stock market, I believe, that's my personal opinion, that we did not start with enough transparencies and with the government's intervention or facilitations, some people would like to call it. So it becomes a murky water, and once everybody is jumping into the water, it's not making the water more transparent. So with the SOEs and with the national teams, God knows what's going to happen next.
So did the national team do the right thing to prop up the market by asking investors not to sell and by asking IPOs to halt? Did they do the right thing? Is it the regulators' job?
I think ultimately, when you have over-regulation, you will have inefficiencies. And serious inefficiencies were discovered in the course of the whole process. But what you're describing in terms of, major shareholders not allowed to sell if you have over 5% of the company, and that security funds are not allowed to sell, and so on and so forth.
And IPO stopped.
IPO stopped. All of those are short-term measures. Those are short-term measures. It's just a fairly clumsy, panicking type of reaction by the regulators.
But the reading back then is that the volatility deserved dramatic actions.
Dramatic action does not necessarily mean the actions that they have taken. I think there was another thing that was occurring last year in the course of this whole process, was the Central Disciplinary Commission were in the Security Regulatory Agency at about the same time. And there were a lot of...
because they believed there were insider trading
exactly,
within the commission.
Very, very serious insider trading. And now that much of the information has become public, that it is true, when the regulators themselves also have a den of thieves right there in the regulators' framework, it's quite dangerous. So whatever measures they have taken during that period, I think were all seen really as a short-term thing. Those measures don't solve the long-term problems in the market in terms of speculative activities.
But I think the regulators' sentiment was that if we did not do anything, it will probably cause even larger problem and risk the financial stability of this country. Will that happen if nothing was done?
It's always a fine line between the market and the regulations. We don't really know where the line should be drawn. Obviously, insider trading is a red line, but what about the others? A kind of mechanism introduced or not introduced, where we see things as a long term, but it turns out the short term shock is much more severe. So I think for China, we have to rely on the sacred words that beware, that you're on your own. That's my interpretation.
And another argument is that the things that the regulators did actually run against the principles of reforms they are committed to do, which is to let the market have a bigger role, a decisive role. Has that hurt the reform initiative?
The reform process will be a long and painful one, and there will be many up and downs, and there will be many hurdles. I think what happened last year was actually quite educational for the leadership and for the market, as well as for the consumer, for the average retail investor.
Is it the case that also the rest of the world have overreacted to what happened in China?
Underreaction or overreaction depends on what kind of a circumstance or who are you dealing with. Now, China's position or China's roles in the global, say, financial market. And be honest, when turn on the Bloomberg, China is always on the headlines. Remember, So it never happened before. So the transparency used to be a slogan that we say to the Chinese people, the local traders. No, you have to be responsible for
IMF, for example.
Exactly. You're not only transparent to your own people, you have to be transparent to the international institutions or investors or even gamers and dreamers. You have to be.
Is China's capital market and financial market better connected to the international market a good news or bad news for China? It seems that it has both pros
We have
and
to face the
cons.
reality. It's a good news for China, especially the regulators. They have to be responsible to their own actions, not with respect to our own people, but to the internationals. And those guys are
But
really
obviously
tough.
the regulators didn't communicate well when they decided to depreciate the
Exactly.
currency, and also led to the market
They are-
doubts
we-
about where it is
my
at.
opinion is that they're also learning.
They're also learning. It's a learning process. I think in terms of the depreciation, actually they've been talking about a basket of currency for a long, long time.
Yep.
And that
Yes.
they simply did not
Yes.
get the idea through to the West, or to the press actually, including the financial press, that we're going to deal with a basket of currencies instead of a dead peg against a dollar.
It did happen. It did happen.
It did happen, yeah. So what they did was basically, okay, according to a basket of currencies, this is what it should be.
August 11th.
That's right. So it's, I think the soft power part of communication in China is still quite weak on a global basis.
It's probably a learning curve for this side. Thank you very much. And you're watching Dialogue on CCTV News. Don't go away. We'll be right back. Talking about regulation, there are arguments of what is the role of the regulators? Should the regulators be hands-free or should be heavy-handed in China's case? What do you think?
I think in China's case, at this point, the regulator actually has to be quite tough, because for those of us who are practitioners in the market, we see so many irregularities and gray areas that people try to take advantage of, and they circumvent regulation quite easily because China is a big country, and it's sometimes at local levels things happen. So I actually think one has to be very disciplined and very tough, and the fines has to be a lot more than the 50,000 RMB fines which are being implemented. In terms of becoming a free market, you have to have a more macro environment that allows it to be a more free market. You have to have discipline among the financial institutions. You have to have sophistication of a lot of the investors
And
as
that
well.
is not the case right now.
That's
So
not the case today.
Liu Shiyu, the chairman of China's Security Regulation Commission, said that we will push ahead with the reform of initial public offering systems. Usually it is merit-based listing. It should turn to disclosure-based listing.
Just register.
Just to register your
Yeah.
company and then let the market decide whether you should go public or not. Is this the right direction? What are the
yeah.
risks involved?
I think instead of talking about the risk, we first talk about why it's
Why?
necessary to go in that direction. There are so many companies in China, and many of them are doing quite well. The issue is the allocation of IPO quota. People can wait
not fair.
online. It's just not fair. And in my portfolio of companies, that I run an investment fund, I have a number of companies been waiting for a long time. And this is why you create this truly ridiculous situation of shell buying. You buy a shell in China, you buy a shell in Hong Kong. This never happens in the other parts of the world.
Because Shell is worth money when you're going to go public.
And the reason
the only access you can
exactly, and in the other parts of the world, if you're qualified, you can apply and you go public. But in China,
So why are these companies you're talking about have difficulties with regulators allowing them to go public?
well, first of all, IPO was precluded for quite some time, and then secondly, the regulators take a long time to approve. We talk about on queue. You wait on queue for months and sometimes well more than a year. and market conditions change. The whole idea about identifying a time for IPO is you also have to consider the market, the various forces that work in the market. I think that's the positive side of this registration period, registration form. But the negative side is I still think that the brokerage houses, the security houses, may be not quite fair in their allocation of selling companies, because even with the registration form, you have to go through security firms and brokerage houses. They're not quite market driven.
But it definitely means diversification of capital market allocation. It means more small and medium-sized companies a better shot of getting funds, right?
Well, small and medium enterprises are really the heart of
Because China's stock market is basically dominated by big name
and
state-owned
and try to get out of that of SOEs or big and dominations. I think it's a very difficult process. While those small companies, I believe they are inherently the bread and butters of a Chinese economy, but
they need funding through the stock market.
They just didn't show it in this financial market, either on the bank side or on the security side. And I believe
Well, why they are the vibrant part of the Chinese economy, why they can have funding through stock market, bond market, and banking loans?
I think the mentality, to start with, I go back to the entrepreneurs. The whole idea of IPO is really not just a simple question of raising funds. Okay, for many, it's try to grab something and exit. And this is very unfortunate for a lot of smaller companies. They could make up the books to look really good for a couple of years in IPO, and then major shareholder somehow grab a whole bunch and go away in a couple of years. And the mentality still is that.
Why they don't want to stay there for the long haul? What is lacking there?
Well, I think it's a combination of things. After 2008, the financial crisis, the 4 trillion program, and so on and so forth, we once again had the advance of the state-owned enterprises and the backing away of the private sector. In the Chinese expression, it's 国进民退, and which was really disastrous because it brought about lack of confidence on the part of private entrepreneurs in terms of longer-term prospects for really building into something.
But now
grand.
the government champion is 万众创新. Everybody should join in the market force in place.
But yes, 创新 in terms of creating new enterprises and so on and so forth. You know, the success rate of new enterprises is very low.
But at least they should have the encouraging signals from the stock markets
then let the banks
financial market.
Allow the banks or force the banks to lend to small and medium-sized companies. Provide support by government policy. Because, you know, these are things that my portfolio companies we encounter all the time. If you're privately owned, sorry, the banks makes it really tough on you.
And another thing is that, on the other hand, those big state-owned enterprises, they got a lot of money and they also get financing from the stock markets, but they're in debt and their products are in oversupply. That also leads to increasing leverage in the financial sector, which is a big risk.
I think 2008 and 2009, so after the financial crisis, China indeed lose the opportunities of a major overhaul. There's always the moment to have reforms. Let's just dwell on the sunk cost. And so the SOEs, my attitude is, let's go back to the Zhu Rongji's era where we need really a major overhaul. We need to set up a goal which says certain SOEs must close or stop doing business in certain industries.
I think in terms of major state-owned enterprises, the government is, of course, applying some measures, implementing some. One Belt, One Road, for example, is something that is supposed to help the overcapacity of a lot of the SOEs, especially in the infrastructure sector, to solve some of these problems, excess inventory and overcapacity. But in terms of real transformation of the SOEs,
I mean financially, especially
financially. The key is, I think many things are being tried. Whether or not they'll work, whether or not they'll be successful, we don't know. For example,
can we turn their loans into bonds
exactly.
and securitize those
No,
assets?
loan converted from debt converting to equity,
Yep.
for example. I mean, these are things which have been tried and have worked in other places. So I think it's an opportunity to try a number of new things. But the task of transforming the SOEs is truly massive. And I think, as Professor said, that it's going to be a very, very big burden on the economy. And eventually, I think it's the private sector which will generate the resources and the growth and the momentum to help the government bear some of the burden of the restructuring
So in
of the
that
SOEs.
sense, the liberalization of the financial market will provide incentives for us to do that, right?
It would, sure. Except that the financial sector liberalization, again, financial sector is still overwhelmingly dominated by SOEs or state-owned entities.
That's why we're talking about liberalization.
Yeah.
We should have more private banks and also
Yeah.
let the stock markets be joined by more small
Oh,
private
yes.
enterprises.
Yes, but I'm saying despite all this reform in the stock market or in the banking sectors, but the resolutions of this SOE issues is we should put on the top agenda. So privatize, I'm not saying it just in a short word, but indeed privatize all steel industries, steel firms, and we can think of thousands of what China is over producing a lot of has dominate the amount.
Over 50% of the world's
yes.
steel is
That's-
produced in China.
It's something we have to resolve.
Yeah.
So finally, what is your sense of China's financial market and also economic performance for this year?
I think if I compare,
sanguine?
I think I'm actually quite optimistic because I look at what's happening in the rest of the world. Ultimately, for those of us who are in the market, we look at the
Because
flow
looking
of
elsewhere, there is very little positive signs.
Exactly, and I see Europe is having serious problems. Not only the refugee issue, but U.S. If you only are hiring new people to flip hamburgers at McDonald's and Burger King and stacking shelves at Kmart, it doesn't really contribute much to consumption. I think what we will see is again a new flow of capital in the Chinese context. Because however the numbers may fall, 6.5, 6.2, 6, 5.8, it is still a leading force. The base is big enough, and I have full confidence really, not in whether or not the regulators are superb, but in the entrepreneurial spirit of the Chinese people.
And the regulators also learning.
Yeah, they're learning very quickly.
Mr. Hall.
I think the major role for the regulators is that to avoid the systematic risk. And besides that, other things could be discussed, could be measured, could be documented. As long as that systematic risk does not arise, and I believe that, as Charles just said, I'm also confident on that. China is good enough or sound enough or big enough to avoid the systematic risk, then it's a time to have all kinds of reform, especially on the SOEs, as I mentioned 3 times in this program.
All right. Thank you so much, Charles
you.
and Mr. Hall.
Yes.
And thank you for watching Dialogue. I'm Joe in Beijing. Goodbye for now.